Welcome to the Accountancy Learning AAT sample paper walkthroughs. In this video, I'll take you through the Tax Processes for Business Level 3, Sample Paper 1, Task 5. This will be based on Finance Act 25. So Part A, we need to identify whether the following statements about transactions outside the UK are true or false. So box 1 of the VAT return does not include exported goods as they are 0 rated. So this is all about what goes in each box on the VAT return, which you'll need to learn as part of your exam. So this is true. The second one, box 4 of the VAT return includes VAT reclaimed on imported goods which have been accounted for using postponed accounting. This is also true. And box 6 of the VAT return does not include exported goods as they are 0 rated. And that is false. A company has recently changed the accounting software it uses to calculate the VAT due to or from HMRC. No special schemes are used. The finance assistant has completed the draft VAT return for the quarter ended the 30th of June 2025. The accountant has asked him to complete a reconciliation to the trial balance to confirm the accuracy of the figures before the return is submitted. So then we can see that we've got the draft VAT return here, and we've got the VAT liability in the trial balance here. And our final balance is 23,560. Now the question goes on to tell us that the trial balance includes closing trade receivables, which is totaling 62,400 including VAT at standard rate, and closing trade payables of 5,160, again including VAT at a standard rate. And these are all from the month of June. There were no opening trade receivables or trade payables. So now we need to complete this table to reconcile the figure in the draft VAT return to the figure in the TB. And we're told to use minus signs to indicate any negative figures. These drop-down boxes here have got these options in them. So first of all, let's put in the two figures that we do know. So the amount due per the draft VAT return is going to be the figure that's in box 5. So box 5 tells us what is due. So we have 14,020. And we know that the VAT liability on the trial balance is 23,560. So these are the two figures that we are trying to reconcile. Now, when we have a look, we are told about our trade receivables and trade payables. Now, when we work out the VAT, so looking at trade receivables here, we can see that we've got 62,400 inclusive of VAT. And we can work out what the VAT would be on that, which comes out at 10,400. So that's our VAT amount. For the trade payables, again, it's VAT inclusive, so we can work out the VAT on the 5,160, which is the VAT on the trade payables. Now, if we go up to the top, we can see that we've got a difference between what the output VAT on the trial balance is versus the output VAT on the draft VAT return. And if we work out the difference between the two, we can see that we've got 10,400 difference in output VAT. And again, if we look at box 4 and the input VAT on the trial balance, we can see that we've got 860 difference. So this is where our difference has happened. So in our boxes then, we're going to have output VAT on aged receivables. And we're going to put in there our 10,400. And we're going to have input VAT on aged payables. And that's minus, because remember the input VAT is what we claim back from HMRC. Let's just change the format of that one. So when we add on the output VAT and take off the input VAT, we then get to the VAT liability for the trial balance. Going on to the second part of this question, we've got to identify the reason for the difference between the VAT return and the figure on the TB. And the reason for that is because it's only taken into account the cash that has been received, because it hasn't taken into account the aged receivables or aged payables. So the VAT return is only taking into account the cash, so therefore the software has been incorrectly set up for cash accounting. Then finally, we need to identify two correct actions that the finance assistant should take. So we've got a choice of 5 here. So we should be making sure that we ask the accountant to confirm the changes before we submit the return. And we also need to carry out corrections by making changes to the accounting software so that the error doesn't happen again. Just to cover off the last 3, we wouldn't need to correct the VAT return next quarter because we haven't submitted it yet, so we can submit it and it can be right. We wouldn't report the corrections to HMRC because we haven't even submitted the VAT return, so they don't need to know about it. And we certainly wouldn't be submitting the draft VAT return without any changes because we know that it's wrong. That brings us to the end of task 5.